Club. Welcome to the market update. Today's January 31st, 2020, Friday. Market has been just closed. So let's continue with our weekly analysis. Let's follow from what we talked about last week. So let's start with the Spyder, Diamond, Qs, the Russell, transport, banks, and the semi there. So market is down across the board. We got about, most of the indices down about 2% today. And nothing crazy, I don't think, nothing unusual, nothing like, oh my God, crash is coming type of move. But obviously, market has been going up pretty much every single day since the October 1st. And we had a swift move here. And definitely, we were, I think a lot of people are anticipating a pullback. And as you guys know, I've been closing out and trimming my positions on top here. I close out my TQQQ calls as I journaled it out. And also I've been, expressing that I've been closing out my index calls recently here. But I've been, accumulating positions this week, not call options or indices, but shares on individual companies that I'm holding, that I've been holding for many years now. So I was accumulating those, and some of the more of undervalued stocks, some of the stocks that weren't moving with the market, and with the recent pullback I was able to accumulate some more. So this week I was able to do that, and today I also was able to buy some more, accumulate some more today. But I think we're right at the juncture. First, let's talk about this moving average, right? So this moving average here, you can see that blue dotted moving average that has been, it has acted as support back in December 3rd. And we initially bounced from there, as you can see. And then yesterday, it looked like we're going to bounce from here. But today, we gapped down slightly and just flushed it lower. So it looks like a little bit of shenanigan going on from yesterday, and we broke below it here. Let's actually check hourly chart. And actually what I wanted to share, what I wanted to talk about, because I think some of the other indices or some of the other oscillators are irrelevant. But what I've noticed on this oscillator, this is RSI. So what I've noticed here on this oscillator is, so first of all, you can see that we made new low, right? You can see that we made a lower low. So I think anybody who chased it long to the upside yesterday, they probably placed their stop here today, and their stops probably already gotten taken out. So we made a lower low here, but we're kind of doing potentially this 65-minute chart bullish divergence has not been confirmed. We have a little bit of dip buying, but maybe it has a property of a kind of a hammer type of candle. So we did see a shenanigan. Looked like we broke through. We filled this gap. We pushed through it. We didn't see a follow through to the upside. We actually gapped down. And then, you can see that that became a fast down move to the upside. If this thing were to gap back above it, right, early this week or early next week, if this were to gap back above it, then you're going to see this oscillator kind of going up with it. And then we'll see kind of a confirmed bullish divergence, right? If not, we stall here, then I expect another down move, which would be then this gap area. It's kind of interesting because when I go to daily chart, you can see that I annotated my box here, my gap box, but my chart shows a little wick. I don't know if your chart shows that, but when you go to intraday, you can see that it's clearly open. The gap box, the gap is clearly open. So I think that's going to be the next destination if we don't swiftly get right back up, right? So if this thing gets right back above it and start to see some momentum to the upside, then that bullish divergence is going to be playing out. And this could potentially be that back-to-back shenanigan. Because we saw this shenanigan yesterday. It looked like market was ready with maybe a double bottom. And you can see that we held this moving average here, here, and here. And yesterday it looked like we could see maybe a gap up continuation to the upside, right? But I tweeted out this week that on my Twitter feed, I talked about if we can able to gap it up above 329, and I think I tweeted it out on this day, right? Like Tuesday or something like that. Next day, it attempted to gap higher. Do you see that? We gapped up actually right here. So we closed here. We gapped up to 328.36. It wasn't quite enough. So I tweeted that we need to gap above 329 or higher for it to potentially make an attempt for the all-time highs. But it gapped, but it wasn't high enough. And so you can see it was quickly sold off, and that became another gap down. And then we stalled here a little bit. We saw a big move yesterday, and then a shenanigan down move today. So if we don't get right back up today to the upside, there's a chance that this thing wants to come back down and fill this gap, or at least challenge this gap. I think we're gonna see a pretty solid support in this vicinity. So 317, 318, 19, this level, I think it's gonna become pretty solid support. So far, the market is down from the peak here, 3.67% or 3.3%. If we go down to the gap fill area, that will be 4.77%. You guys remember what I talked about early part of this year and late last year. I also talked about how much pullback we're going to get this year. I talked about 4 to 8%. I don't believe anything higher than 10% this year. All throughout this year, we're going to see about 4 to 8%, right? So we are right at about 3.37% so far. So if this thing comes down to retest this gap area, which will be then, they'll make that 4%. If you fill that gap, there will be about 4.85%. I think definitely this is, if we do come back down to about, let me annotate that, put that there, put that here. So 319, 316. I would also buy that there. I might even thinking about buying some calls on the indices in that vicinity. 319, 316 or something like that. So I think if we continue lower, I think that's the level that we're going to find good support. And I think just the way it kind of came down today after a huge move yesterday, if we do see a momentum to the downside next week, we'll probably come and fill it at 316. And we're probably going to see a pretty strong bounce from that point, right? And we'll have to reassess the situation at that point. Or if this is going to become a back-to-back shenanigan, right? Big move, next day tankage. And then if it does go higher today, then we'll fulfill that bullish divergence on the RSI on this 65-minute chart. And we may come back up, retest this level. We also got a little bit of gap here. Let's annotate that. And we'll follow up on this next Friday. We'll follow up on this, see how it plays out. So unless bulls can bring this right back up, we stall here, there's a good chance we fall right back, right? If we stall here. But if we get right back up, it becomes another shenanigan, right? Then there's a good chance we're going to come back up here. And at that point in that process, we'll fulfill that bullish divergence. So at this point, I think we can kind of label this in the minor term. I will say in the minor term, the sentiment is neutral to bearish. Unless the market, the price gets back above this moving average. So as of today, I want to label this market in the minor term neutral to bearish with bullish intermediate term and primary term bullish. Any kind of a steep pullback from this point on will be a good opportunity to accumulate, right? To accumulate. So let's kind of follow up again next week. And if I see anything, I'll tweet things out at 2K Kim with charts and things. But let's go to Diamond here. So Diamond is pretty similar look here, right? So you got a little gap here. And next gap area is, actually there was a gap. The gap was just, so you can see, so it's a little bit different sentiment here. So on Spyder, you can see this gap is still open, right? 319, 316. On the diamond, however, you can see that we just filled that gap today. See that gap? That gap just got filled. So that could help the market to initially bounce on Monday, because we just filled that gap. Doesn't mean it's gonna bounce right back up to fill this gap, but at least a small bounce potentially be expected, because this gap was filled, and when the gap gets filled, a lot of times it does act as support. Let's look at the hourly chart, see what it looks like in the, yeah, similar look here. So you can see, I think you see, okay, so now the mind game begins. So here you go, here. So what's happening right now, this is what Bear is gonna argue. Bear is gonna argue that this is left shoulder, this is head, this is right shoulder, and this is a break, the confirmation of neckline, potential retest before falling harder. But things can get tricky here if you focus too much on the short term of things, because if this thing decides to do something like that, there will be a reversal taking in place. And I've seen this happening so many times, especially in an extended uptrend. Because this is what a lot of people don't think. Because we're so extended, because so many think that market has been due for a severe correction, because the market's been going up every single day since October lows, right? So now that, oh my God, we got this head and shoulder formation, and we break below the lows, and we saw shenanigan from what it looked like it's gonna be a huge bullish run, but we pull back here. So I want to be, that's it, there's a gap down today from this morning, and we broke below it. So I think this is a level that things could get a little bit hectic. Shenanigans can happen back to back. I think a lot of people, a lot of their longs got stopped out. Maybe a lot of people flip bearish at this point, looking at that potentially this is head and shoulder formation. But I'm telling you, I've seen these patterns happening over and over again, especially in an extended bullish, because they actually think, because the market is so extended, it's been going up every single day since October lows, last 4 months straight. With this pattern, with the head and shoulder formation, there gonna be more severe correction. A lot of times, opposite happens. Market throws something like this, make you get scared, and market could bring it right back up, and you might miss the next buying opportunity. We got something similar here, but not as potent as the Spyder. But again, I wouldn't put too much weight on this until we see something like that. But keep in mind, on the diamond, we did have this gap filled today. So that's going to provide some support unless it gaps down again Monday morning. But if we don't gap down and this thing gets back up, things can get a little bit interesting at that point. And if you're a short-term trader, it's going to be a lot of mind game for you trying to figure it out. But yeah, so the gap was filled here. But next level, I think 279, 275, which is just below that. I think, again, this level here, is if diamond comes any level here, that's definitely great buying opportunity. So instead of trying to short this and trying to time perfectly, you know, what the market is going to do, it's better to kind of sit back and relax. You know, hold, if you've been long on these dips, you know, hopefully you didn't chase it up here. I've been, and if you guys have been following me, that I've been telling you guys, I've been closing out, I've been trimming my positions up here, right? So if you've been long throughout 2019, kind of sit back and relax, be cool and calm, and as the market comes down, get ready to buy these dips. I mean, you could have even maybe gotten a little bit today, like you could have done some initiating position, buying the dip process this week, just a little bit here and there, and then as the market comes lower and lower and maybe retest some of this level, you can go heavier and buying this dip. I kind of feel like because this is very obvious level here, and maybe a lot of people are looking at this thing to come all the way down to retest that. I'm kind of leaning towards maybe falling short and then getting up, because maybe a lot of people are looking for that, like looking for this to come. But if we do come to 276, you definitely, that's definitely going to be a gift. But there's still a good chance that we bounce either here, right here, or come down to about 279 and then bounce. So, nevertheless, I think 279, 276 definitely going to be a very, very strong support. Given the fact that, that's the level that it's been acting, that's what like a rising pivot. We broke above it. Any kind of retest is going to provide that solid support for next leg higher. Next leg higher is going to be even more higher, I believe. Let's go to Nasdaq. So Nasdaq is not even near the breakout level yet. We're still up here. Isn't that crazy? We haven't even begun to retest this moving average. So Spyder broke below it today. Diamond is well below this blue dotted moving average. Well, the Qs hasn't even begun to retest it yet. Very, very bullish sentiment here. Let's actually look at 65-minute. Just kind of curious here. Yeah, so on the Nasdaq, we haven't even broken below the lows here. We're still above it. So much more bullish. I mean, I would have to label Nasdaq as bullish in the minor term. I labeled Spyder neutral to bearish. I will label Diamond bearish in the minor term. But on the Nasdaq, I'll categorize this as bullish in the minor term, staying above this rising moving average there. Let's continue Russell 2000. I think Russell 2000 came down heavier here. We actually filled this gap. We had a two gap. We had a gap here. We had a gap here. Both of those gaps got filled. Let's see here. Right? Yeah, so I think... Yeah, I think you see that gap was filled here. I think with the Russell filling that gap, Diamond also filling that gap today, I think there could be a bounce unless there's a gap down. But I think there's going to be a bounce early next week. But what we have to figure out is when we have a bounce, is it going to be a little bounce, maybe do another bear flag or some sort before going lower, or is that little bounce going to become something, right? So we'll kind of try to figure that out next week. Again, if I see anything, I'll tweet things out at 2K Kim, and next Friday we'll follow up on this. And I think definitely on the Russell 2000 also we saw nice consolidation here, right? We pretty much consolidated throughout the year 2019. We finally broke out. We're coming down, retest this level, and I think in this vicinity also it's a good level to accumulate on the small caps there. Let's go to transport. So you can see small transport. This is why you don't ever want to chase it. Transport had quick breakout, what it looks like, falling lower, but I believe that sooner or later transport is going to break out of this, and transport is going to run. And when transport and the Russell 2000 decides to run, it's going to prop up the market. I've been saying this for weeks now. So transport is just retesting some of this level here, and let's see, is there a gap here? No, next gap isn't until here on transport, but I don't think we'll get to that low. I think we're getting pretty close here. I think we're gonna find some strong support in this vicinity here. Got the gap here, so we'll see what happens with that. Let's go to banks. So we're still holding this level. So we're still holding this level. Let's get rid of that. Next gap on XLF is here and here. So let me put that. So gap fill is here and here. So there are two things gonna happen. Either we hold this area, right? This rising pivot. You can see that as a rising pivot. We either hold this, here, there's a gap down. Let's annotate that also. So either we come down a little bit, we hold that, maybe do something like this, and then go higher, or finally break below it, create some panic before going higher. Either way, we're gonna go higher. But I think if we do break below this level, I think 290, 29, 12, 28, 66 is gonna act as pretty strong and solid support. So I watch those levels. Let's go semiconductor. I'll end the video with this. Let's get rid of that now. You know, there's another support here. Let me draw this in a little bit differently. If I draw from here, I think it works better on the weekly chart. Oh, I know why it's not connecting. It works on SOXL, but it kind of does. It works on XOX. It's a little bit different looking on semiconductor because I was looking at it on SOXL, which is triple shares of a semiconductor. It worked it connected perfectly, but here it just kind of don't. But anyway, so we got the gap here. So let me give you the level here. Here. So we got two levels there: 134.463, 129.51. As you guys know, I've been long on semiconductor since here, and been buying the dips and held everything. Had not closed out any, and I've added it today. And if this thing continues to lower to 134, 129, definitely a level to buy there. Definitely level to buy there. Because I mean, we broke out. This is why you don't want to chase. Pulls back. You could buy that dip. And those long-term moving average, you can see there's a long-term moving average here. And that long-term moving average been acting as support here and here and here. But I'm kind of leaning towards this thing not coming down all the way. Again, psychologically, I think everybody might be waiting for that. And, you know, the market might want to come down maybe here and stop short before going higher. Even just here. Anywhere here, right? Not coming all the way down that obvious level where everybody's looking for before going higher. So I think so. Like 134, I think it's gonna be pretty solid support when it does come down there. Banks, if we break lower, either we bounce from here after fizzling a little bit, maybe short-term consolidation. 29.12 is gonna be very strong support. Transportation, either we bounce from here. I think worst case scenario, we come down to 183. The worst case scenario, I think. Russell 2000. We bounce at 159 or 150. It's gonna act as very, very strong support in this vicinity. Nasdaq is up so much. It's just, it's barely. We're barely. I mean, still up 4.6% here today. Diamond. Yeah, so either 279, 276 is gonna be strong support there. Spyder. Same, 319, 316 is gonna be strong support here. So you know you're probably gonna hear, if you roam around Twitter or whatever, you're probably gonna have people thinking that, okay, this thing got up this much, at least retest 200 SMA or something like that. There are gonna be people calling for like 300 or 310 or 300. I don't think I'm gonna get there. Again, it's gonna pull back and stop short. We're gonna run higher again. We may do a little double top, maybe create more panic before going higher. I'm not sure how it's gonna do it, but I think we're not gonna go any lower than 316 on Spyder, and that's kind of my call for now. And we'll see. We'll follow up how it plays out, how the market deal with 319, 316, and we'll go from there. You guys have a wonderful weekend, and good luck trading next week.